Hey, thanks again, once again for tuning in. As I always mention in every video, please put God first. Once we do that, God puts everything in order. Next thing I want to do is get right to the video. I'm sure everyone has seen enough of what's been going on in Hollywood with Will Smith and, Chris Rock. And I'm not here for that, but I thought I'd mention it, kind of jazz it up a little bit over here. However, let's get to the point at hand. As I discussed in the other videos, we have our Roth IRAs, municipal bonds, and IULs all in that tax-free area. We have the other taxable areas here, and we also have tax deferred here. And the reason why I have the arrows here, maybe it should be a different way, but you got tax-free dollars going in, tax-free dollars going, taxable dollars going in, tax-free dollars going in here, and it's also coming out tax-free. So after those dollars have been taxed, comes out to you in a form of income, tax-free. And I guess we want to double down on the reiteration. Tax-free is important, at least to me it is. An explanation mark there. So those dollars come in tax-free. The next area that we're going to talk about, and please work with me, I'm working on the ums. I used to do Toastmaster. I used to do, there I go again. I used to do seminars in rooms of over 200 people. And I yelled not a nair. So bear with me. There I go again. Bear with me. I'm going to start this video over. No, I'm going to continue. All right, forget the ums. Let's get this information out here. So next area we're going to talk about are municipal bonds. And I'm going to put the municipal bonds over here to the right because I'm going to save some room over there for some other information, or the last one, which is the IUL. And let's go here to the municipal bonds. I'm going to get you that information. So municipal bonds, I want to let you know, I don't want you to confuse them with corporate bonds. There's such a thing as corporate bonds. Corporate bonds are, in many cases, 100% taxable, federal and state. So please consult the tax advisor before you utilize any strategies using bonds. And one thing I want to add is that municipal bonds are typically used by the ultra wealthy. The ultra wealthy love the city of Compton. When I worked at ML Stern Company over in Beverly Hills, our allotment of bonds for the city of Compton would sell out like that. So don't get it twisted. People love Compton. So now, the interest on these bonds are generally a lower rate than a corporate bond. That's the attraction. That's the big difference. Corporate bonds pay a little bit more interest. Municipal bonds pay a lower interest rate, but however, they're not taxable. A lot of people use this to hedge their wealth, not actually grow their wealth. So you can actually determine which one is best for you. Plus, highly rated municipal bonds are generally very, very safe. And they have a very small default rate. That means like the whole city or municipality would have to cease to exist, or you would own your small city. The next area over here I want to talk about, and the last area, I should have put some 1, 2, 3s on those, is IULs. So let's not be specific. Let's just say cash value life. And in the cash value life, there are actually different sectors in the cash value life. And I will do a video on that. That will actually show you what is the best instrument for you. A lot of companies out there, they say buy term and invest the difference. However, that could be self-motivated, and they aren't telling you what's going to go on in the long run, meaning that mutual funds go up and down, and also they're taxable. So we'll get into that discussion in a separate video. So let me continue with the benefits of a IUL. And the benefits of an IUL versus the other products, not to mention the cash value that is attributed to these accounts that can grow substantially. In my personal business experience, I have utilized the IULs for very large amounts of money, small amounts of money. Just depends on where you are at in life. You can put $1 million into one of these. You can also put 150,000, or you can put $150 a month. However, during that course of time, you're not just waiting on the long run, meaning time for these investments to mature, time for these investments to grow. A benefit outside of the Roth IRA and also the municipal bonds is that with cash value life insurance, you have a death benefit attached to it. You also have a critical illness waiver. So if you are diagnosed with a critical illness, hypothetically, depending on the amount of the account, let's say you have $1 million worth of insurance, you could be paid out upwards of $300,000-$400,000. And the same goes for chronic illness. There is a rider associated with this called a terminal illness benefit rider. Please talk to your insurance agent about these, and I will tune in for my next video. And thank you very much.